25 basis points. That is what the Fed are pricing in, or that's what 25 basis points. That is what the Fed has decided on, although it not unanimous, although it was a split decision, but 25 basis points is what the Fed finally agreed upon to cut interest rates to once more for a third time in 2025. How did that affect our overall market? We're looking here at the weekly chart for S&P. This is, or I'm sorry, the SPY. This is going to be the ETF of the S&P 500. And you can see that overall, if we're just looking at this weekly chart, it's not really doing anything for us, right? We're struggling with those 688s again, just like we did last week. And we're really going to have trouble in here once just trying to get out of those 689s, those all-time highs. We have to get back to those all-time highs and then breach those and then go from there. But overall, just on the day, a nice little pop in here, 682 around 2 o'clock, and then boom, where you had those highs in here of right around those mid to upper 688. So decent move overall on the day to the upside in here. But overall, if you're looking at this weekly chart, you're just waiting for something to kind of pop off, right? So 3 weeks ago, we had a huge green move. A couple weeks before that, you had decent moves to the downside with all that volatility. So something's got to give here as far as, are we going to breach these all-time highs here soon and then work on that next leg, or are we just going to get a very, very harsh rejection here off of these all-time highs? So that is going to be kind of the question as we continue throughout the week. Couple more trading sessions we have in here to close out this candle, but it looks like everybody's pricing in right around a $5 expected move by this Friday. Next week, everybody is looking at right around a $7 expected move next Monday, $8 by Tuesday, and then $9 by Wednesday. So your volatility has collapsed in here. Obviously, with that big $6 move that we had from 2 until right around that 340 time frame today, that obviously collapsed volatility more, or contracted volatility more. So we're going to see what type of expansion we do get in our IV in the next coming trading sessions or going into next week. So as far as our levels, we just mentioned the 689.70, the all-time highs in here. On the downside, 9-day EMA sitting at 675. That's going to be major support for us. So we want to tighten that up. We can go back to those 682, 683 areas where we were before we had that $6 pop in here after that announcement from the Fed. Anything below the 675s, then we're looking down here at the 672 and then obviously 652 right here. So all in all, we're going to see what happens in here as we continue throughout the week. We're going to see where we close out this weekly candle and see what happens next week. But it was looking like if we cannot breach those all-time highs and start working on our next leg higher into the 690s, then we might need a nice, healthy rejection in here and a expansion of our IV and a pop in our VIX. So let's see what happens in here in the next few trading sessions. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.